Like much of the Midwest region, Cleveland notched some unusually strong job growth in 2011 and 2012 thanks to a mini rebound in manufacturing jobs, but it is cooling down a bit through 2013 so far. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Cleveland update. Cleveland rocks, yes, and I personally think Cleveland is one of the more underrated cities in the country, though I should confess my opinion may be shaped to some degree by bloodlines, but there is no denying, unfortunately, that Cleveland's apartment market is cooling off. So here's a story from much of the Rust Belt, Cleveland included. In 2011, 2012, we saw job growth at unusually high levels, and by high levels, I really mean moderate, but high for this region of the country over the past couple decades, by those standards at least, and that little burst was driven to some degree by a surprising uptick in manufacturing jobs, particularly in the ever-important auto industry. So in turn, occupancy climbed to unusually high levels all across the region. We saw even some nice rent growth through that period as well in these markets, which is pretty much never the case for the Midwest region, or particularly along the Rust Belt. So Cleveland fits that mold very well, and you can see that first of all in this chart showing annual employment change by quarter. There in 2011, 2012, you see those surprisingly high job growth numbers, best in more than a decade. But then Cleveland reverted back to job cuts in each of the past 2 quarters. So as a result, occupancy has cooled off, though it's still healthy at 95.3%. A good number here by historic standards. It is down, though, 150 basis points year over year. And on a quarterly basis, occupancy has fallen in 3 of the past 4 quarters, so that's not a good streak. And as you would expect, rent growth levels are normalizing, actually still pretty good as of Q3 at 2.5%, but that's down from the 3 to 4% range seen in the past couple of years. And even that 2.5% number looks unsustainable if this recent economic slide persists. Interestingly enough, though, 2.5% annual rent growth was good enough for second place among major markets in the entire Midwest region, which again just tells that story of the region-wide slowdown. These markets did much better in 2011, 2012. So Cleveland tied with St. Louis, and only Milwaukee was better, and even Milwaukee was at 3%. Which is below the national average, in fact. So again, all of this region was doing much better a year or 2 ago, and this just shows how widespread that trend has been. Now, the exceptions I should quickly point out are Chicago, Minneapolis, St. Paul, and Columbus, and those last 2 you don't even see in the top 5 of this list. And in those spots, supply issues are more of the factor, or a bigger factor, I should say, than demand, and you can even make a case that rent growth should be better in places like Columbus and Minneapolis. But let's wrap it up with a submarket snapshot in Cleveland. That is the central Cleveland area, which is basically the downtown area. And you can see occupancy is very strong, as it usually is, 97.5%, even though it's down year over year. But rent's up just 2.2%, which puts it just below the metro norm. So I would love to say that Cleveland should get rocking and rolling again soon, but I am not sure you believe me. Now, I can point out, though, that labor economists do expect job growth numbers, or job numbers, to get positive again through the next couple of years, and that should help Cleveland start to see some normalization as opposed to further deterioration. So we think occupancy stays in that 95% range, but rent growth is likely to remain limited and actually drop off from where it is right now. And that wraps us up for Cleveland. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.